Hello, how do I identify trend reversals and entries? Swing trading chart analysis. Let's take a look at two stocks that we have on our watch list and see how we can identify the reversals and the entries. So the first one is NDAQ. So we have maximum daily charts open here, and that is Think or Swim platform. So NDAQ, on our maximum daily chart, we have support lines that we trace, and one or some of them will be our entry points. So you will first trace your support lines passing by the lows of the charts, and you can start that using a maximum monthly chart, and you locate the long support lines passing by the obvious lows of the chart, and you will pick the ones that the price is most likely pull back to use as a support line or valley line before going back up. And those support lines are support lines that the price will pull back to after it reach the maximum peak that it wants to reach when it left that support line the previous time. So that will complete a full cycle. So when you are looking at this on the maximum monthly chart, we color code two support lines here, and they are long, meaning they are longer than 1 year time frame. The year is the dotted lines, and as we trace those support lines going toward the price on the y-axis, you have the date on the x-axis. We notice that this is more like a support line supporting the upside wall of the mountain on the rise while the price is going up. Therefore, it could well be a support line for the upside wall of the mountain, and this will be most likely the valley line of the mountain, assuming the mountain is this tall and then will come back down to that line again. Therefore, we color code those two, but we think is less likely to come back this low because it has not touched base with it for some years, when this is the most recent one. Of course long, but touched base with a few years ago. So we select this one because we think this is just too higher up to be a support line for the valley of the mountain. So now we'll go back to the maximum daily chart and just keep analyzing from here on. And as we are looking at it, so by color code those two lines, this one is the one that is our entry point. So when the price pull back to it here, it pulled back a little bit but didn't come all the way here. So we'll assume it just pull back to rest on the support line that is supporting the upside wall of the mountain, and then it went back up. And today is October 18, 2025. We are analyzing the chart after the market closed yesterday. So yesterday the market closed on green. That means the price at the end of the day was higher than the price in the morning. However, the price, when we compare it to where we want to buy in next, the price is still higher up. Therefore, when the markets open next time, we are not going to buy. And this is based on our swing trading strategy that I like to call long uptrend line swing trading strategy. You want to buy the stocks at a long trend lines. When the stocks pulls back to that trend line and start going up from there, making higher lows. After a few higher lows, you can buy some share at the first or second green bar that follow a pullback, a higher pullback. You just don't want to buy it right away after a pullback to that support line, especially if that'll be your first time purchasing that stocks, because you don't know if it's done making lower lows and it's ready to start going up. That's why I like to wait a little bit to see if we have a trend reversal, which is a term I don't like to use too much, but I just like to say to see if it start going up, because when it start going up, it's going to make higher lows. When it's coming back down here, you will notice that this low is lower than this one, which is lower than this one, for instance. So you have lower lows when it's pulling back to this support line, and when it start going up, you'll start seeing higher lows. This low is higher than this one, or higher than this one. This one here is higher than this one, and this one here is higher than this one. So you have higher lows when it's going up. The uptrend will be going upward. So, and then it reached a new high, pull back a little bit, went up, pull back a little bit, went up, and pull back a little bit. So we don't know if it's on its way down or if it's just going to rest on this support line and start going up again. So that is how we determine our trend reversal, if you want to call it that way, but more precisely, that's how we determine our entry points. So the next one we are going to analyze is NVDA. NVDA. Okay, so NVDA, we have one support line that we consider being the valley of the mountain, and we color coded. So when it touched base with that line, it went up, pulled back to rest at the support line, supporting the upside wall of the mountain, went up, pulled back, and just, doing those zigzag, I like to call it as well. And we traded in 2024 using short uptrend and swing trading strategy, and we traded multiple times. But then we purchased it again. It went up a little bit and pulled back, went up, we didn't sell it, reached a new high there, we didn't sell it, and then it just started pulling back. So I prefer to use the term pulling back more than a reversal, again in relation to the strategy we are using, and just to use simple terminology that you and I can understand. So, and then we just got stuck in it, negative, but we didn't sell it. So we stayed there until it pulled back to the support lines that we wanted to buy it to begin with, and then it started going up again, surpassed where we purchased it, and we just sold it. That's why we have the arrow there. So the arrows facing upward shows where we purchased, and the arrows facing downward, those arrows shows where we sold it. So we sold it there, but then it continued to go up. We didn't purchase it again at the support line when it touched base with it and start going up. We just have that one and we just kept it. But now that we determine the support lines and our entry points, we can talk about the exit point. So we got out of the trade right a little bit after it reached a new high, and a new high is an exit point strategy for us. As soon as the stock reach a new high, it will be all-time high, because we are using maximum daily chart, a maximum chart. So it's going to show you all-time highs. As soon as it reaches, we can either get out or stay longer in the trade. So that is our first exit strategy. But then whether you want to get out right away or not, you can compare the last time it touched base with the support line that is the value line and reach a new high. If automatically it pull back to that support line again. So the last time it touched base with that support line was here, and like the previous time and the last time is here. So you can see that it stay on that rise for a while. Therefore, we could have decided to remain in the trade longer because it could well remain in that rise for about a year as well, the way it did it at this area, around this area in 2024. So 1 year time frame, it was on the rise, but we just sort of accumulate a small profit and get out of it and just keep observing the chart. But yeah, and those are strategies that you can decide to stay longer in the trade after you purchase it, and that will just be a second exit strategy, looking at, you know, for how long after it reached a new high, for how long it continued to go up. And here is almost like a year. Therefore, you can decide to stay in the trade half that period or half that time frame, assuming it could repeat the same pattern, but you don't know for sure if it's going to repeat exactly or not. You can decide to stay in the trade half that time frame or 2/3 that time frame. And the third strategy would be to quantify your exit point so that you can support the second strategy. And to quantify the exit point, you can use the previous high, which will be in this case 153, and the touch point with the support line will be the lowest point, which is 37. And with a calculator, you will use the highest price for that circle, 153 divided by, was it 37 divided by 37, give you a 4.1 ratio. So from that 37, it went up, it quadruple that price before it was done with that rise, and went back down to complete the pattern of that mountain or to complete that circle. So if it's going to repeat that circle again, which you are not sure, but you are assuming it's going to repeat that pattern, then we'll use 4 for instance, and the lowest point here is 86. We can use 86 times 4 is giving you 344. But then we can decide that, well, when it reach the first the highest point from this going up, starting a new circle from here, when you reach the new highest price, we can decide to stay in the trade for half year, half the previous period of time that it completed that circle, when it start going up and reach the first new high and was done reaching new highs, to stay in the trade for half that time frame, which will be about 6 months, or when the price reach 344 to sell it. So those are strategies you put in place to guide you as you are analyzing the chart day after day or so, or every weekend, to keep those in mind. And when you are getting close, to decide which one of the last 2 strategies you want to rely on to sell the stock, to lock in those accumulated profits, and then get out of the trade before it's done with that cycle and decided to go down, because those stocks, they go up and they go down. So you want to accumulate the profit on their way up and then buy them again at the valley when they pull back and start going up. So that is the strategy we use, and that's how we determine our entries and then our exits. Thank you so much for watching our videos. We thank you very much for your time. And again, when it comes to NVDA, yesterday the price went up, but again, it's far from where we want to buy. Therefore, we are going to wait on it. We are not going to use short uptrend and swing trading strategy, which could be used considering we sell a little bit too early, but then that will stipulate we will buy at a higher price with the assumption that is going to continue going up for about 6 months at least, if not 1 year or so, or like 8 months, from January to almost 12 months, or at least 6 months or so, knowing that it's going to be pulling back to the support line where it is right now and start going up in that, or just wait and observe it. And I think there is something we need to consider when it comes to NVDA. I believe there was a split stock sometimes last year, but I'm not sure. Don't quote me on that. But those are things to consider as well, because some stocks sometimes they split their stocks to divide the share into smaller prices to make it easier for people to invest in them, to buy share easily. So thank you so much for watching. You can go to NVDA to see for that first trade in 2025 what profit, small profit we lock in. NVDA. So NVDA, we purchased it in 2024, right at the end of it, for 139. And we sold it six months or so later, July 2025, for 159. So it's like $20 profit per share, or $1,567 profits, net profit, or 14% return. So we didn't sell it with a stop loss. We didn't sell it at a loss when we purchased it at a higher price and it went up a little bit and then was done and started going down. We just kept a negative in our account because it is a good stock to begin with. We know at some point it's going to go up, whether it takes 3 months, 1 week, 6 months, or 1 year. At some point it will go up, and we just kept our money in it like that for 4 months or so, or 5 months, until it start going up. In fact, more than that, because we start seeing positive around June. So for well over 6 months before it became positive. So we remain negative in that stocks for that time frame, taking into consideration somewhere here we're a little bit positive, and then in 2025 the price went down, and for 6 months we remain negative before we start seeing a profit again. But because we purchased it so high, close to the new high, the previous new high, as soon as we start seeing positive number, you reach a new high again, and we just got out of the trade to lock in that profit and use that money to buy another stock. But we could well have used those last two strategy, exit strategy, to better analyze the chart and decided if we want to remain in it or get out. But because we bought it so high, my analogy was that when they pull back, you see those heavy pullbacks here to this support line. My analogy that if it does that here, I could easily be negative. Although Now that I'm putting the mouse on it, it may not go that low when it's pulling back, but again, I'm not sure, but it is just yeah, it could pull back heavily, and I could be negative for a short period of time before it will go up again. For that reason, I just started to get out, because I didn't buy low enough to want it to remain in the trade longer after the first new high was reached. I was okay with $20 profit per share and got out of the trade and accumulate that good overall profits. $1,000 profit is a good profit. 14% return for investing in something for 6-7 months. That's good, because you don't get 14% return on your money at the bank. You'll be lucky if you get 0.1% on a monthly basis. My bank give us interest every quarter, and I don't even know what the interest rate is anymore. It's just minuscule. But those are things you have to consider when you are. It's very important to save money, but just keep in mind that when you are saving money in your bank account, it's not much different than saving money and put it under your bed. It's money you are putting there at the bank so that you can do something with it. So therefore, taking a portion of it and invest it in the stock market, or invest it in your business, or invest it in a rental property, or invest it in a swing trade with it, is one way to shelter your hard work money from inflation. Keep multiplying it, where your time is not much of the factor making it generate more money for you. You already put your money, your time in factor to generate that first income, your paycheck. So if you can find a little bit from it to start swing trading, where your money is working for you without you putting equal amount of your time in it to generate whatever profit you are going to be generating from that secondary work you are doing to fructify your investment, your saving. So it's important if you can learn to swing trade and start small, one share at a time. Minimum profit target $1. But with long option and swing trading strategy, when you buy at the valley, when the stocks start going up, and sell it after a few peak, you will accumulate more profits. Your profit will be higher than $1 for sure after you pay all your brokerage fee. You just want to start small for a stocks you never traded before, to see if the strategy you are using is working well with that stocks you want to swing trade. Once you have that confirmation that you can be profitable trading that stocks with that strategy you are using to increase that profit, you just buy more share of that stocks. Next time you'll buy it again. That's how you'll scale your profits going forward. But first, you wanted to choose the strategy you want to use and find stocks that are working well with that strategy. And once you have your watch list to trade stocks, you just trade from it. Like yesterday, my husband was telling me, reading online, that few stocks that are good to buy and hold forever, to invest in forever. And he was talking about Abbott and Johnson & Johnson. I was just listening to him. After a while, I told him that, well, I don't go online searching for, the best stocks that I will hold on to or I will buy. Once I know how I can search those stocks myself. Although I'm one of those people that are creating content to share stocks that you should be buying or not. But then I rectify myself, saying that in fact I'm teaching people how they can find those stocks on their own. And I think that's what I'm doing. I'm not telling you the stocks you should buy today or tomorrow, but I'm sharing with you how you can find those stocks to create your own watch list and trade from it. And if a stock's on the watch list is now working well with the strategy you are using, you just put a note on it that you don't want, that you want to remove it from your watch list next time. And then you just go back to your master list and pull stocks there to replace it. And right now I'm going through my master list again to start putting some notes around stocks that I want to create my 2026 watch list with. And that is the watch list that is going to be for the whole year. And those are large cap stocks, upward growth large cap stocks, and I think they are good to use with our long uptrend long swing trading strategy when you are a beginner swing trader, because those large cap, they do not fluctuate too quickly. When you are hesitant to enter the trade, you will still find it around the support line where you want to buy, or when you are busy to analyze your chart often, you will still find the you'll still find a way to enter the trade around the support line. And sometimes it will be a blessing in a sense that you'll avoid buying it too early, and sometimes you'll catch it a little bit further when it's already going up, instead of buying it early and then it will keep pulling back on you for a while before it starts going up. So with those large cap stocks, you are not going to make a large profit right away or from a small number of shares, but they are so steady that you are not going to lose sleep over it when you buy too higher price, because you know that they are good stocks. At some point they'll go up and higher up past the price you pay for it, and you'll have some profit in it. You'll just get stuck in that trade for longer, but you are not going to lose sleep over it. They are not penny stock. They are not sold on you trade stocks that are sold on New York Stock Exchange and NASDAQ. So knowing how to find those stocks to create your own watch list. When you want to buy stocks, you save some money, you have money in your account, you want to buy stocks, you have your watch list to just analyze from, to see which stocks is pulling back for you to keep an eye on, so that when they start going up you can buy. You just go back to your watch list and keep analyzing from there. You'll do the hard work to create the list to begin with, and that is your dictionary of stocks to go to buy from, and keep improving it until you have a well curated list of stocks that you at least purchase each stocks from once or twice, that you are confident that they work well with the strategy you are using. And because they are living companies, at some point they might stop working with the strategy you are using, and you might take it out, or at some point after, for customizing your strategy for so long, maybe some stocks might stop working well with it. You might take it out. Just don't think it's just be doing it once and be done with it. Let's just assume that something will keep working on, but at least you'll have, it will be easier going on. You are not going to turn up to the web looking for a stocks to buy today, because a stocks to buy today should come from your watch list. At least that is my opinion. So thank you so much for watching. We thank you very much for your time. Thank you for watching our videos. Thank you for all your comments, and thank you very much for subscribing to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel, and NDAQ.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to trade, is one way to make money. Just start small and grow your account from there. For more of our swing trading tips, please check the playlist in the description of the video. And coming back to the story, as my husband was talking about it, I told him that, yeah, I like Abbott, but it will not be a stock I will trade. I will swing trade because I did it before, and that's why I have that arrow on it. Probably purchased it in 2024 and sold it. But again, let's go to, I just don't think is a stock I want to swing trade. Maybe at some point again. And as for Johnson & Johnson, we purchased it and sold it for dividend income purposes. So when it reached when we have a good profit on it, I sold it this year. So we should be able to come across it. So we purchased it in 2023, and in 2023 we didn't swing trade. We purchased stocks for dividend income purposes, and then we reinvested the dividend for a while, and then we stopped. But for 167 that we paid for the first purchase, we sold it pretty much 2 years later for 166. So we have a loss on that one and have some profits on the other. So when we total those, $49 profit. So not much there, but again, as soon as it became positive enough, I just sold it and got out of it because I purchased it for dividend income purposes, but I do not want to swing trade it either. So those stocks we purchased before 2024 for dividend income purposes, as they become positive, I'm selling them to just get out of those trade and use that money to swing trade. But again, they are not stocks I would want to swing trade using the strategy we are using. Does not mean they are not good stocks. They just don't make it to my swing trade list. But yeah, I don't have anything against them, and I like them, and I still have Johnson & Johnson in one of my brokerage account that I purchased some years ago, and it's still positive. I don't even know why yet I purchased that, but I'm not saying those news are wrong or anything. I'm just saying that you have your own list that is telling you stocks you should be purchasing from, or stocks you should be purchasing. So, and you just if you have some time, just continue curating it, adding more to it if you want a long list or if you want a short list, to have those stocks that are well, the chart is just so well that you want to keep swing trading those. And at some point I might decide to swing trade those if they make it to my short list. But until then, I wanted to see if there are better ones that are working well with my strategy for me to focus on. So, but that is just my take on here. ABT, let's see if ABT even made it to our long list here. Yeah, it is in it, and we say it is a good chart, so we don't need a news to tell us about it. Your list is right there for you to pull from. Thank you.